Let's welcome in the management at RailTel. Aruna Singh, CMD at RailTel, is now with us. In Q4, the telecom segment performed pretty strong. What is your growth outlook for FY23 for the telecom space? Any signs of recovery, especially in the ECL part?
Yeah, definitely. If you have noticed in the financial statement, the ECL accountal we have made, and actually the profit incurred by RailTel has been for the entire year of the order of 43%. And if you take into account the ECL of 38 crores, then also the profit is of the range of 23 PBT and 20 for PAT. So this is a fair enough profit for a company like RailTel, which is into the business of providing catering to government sector, including DRDO. And moving ahead, I think FY 22-23, we are expecting a better performance.
Okay, Ms. Singh, that point is taken that you are expecting better performance in FY23, but could you throw some more light in terms of the numbers? What kind of growth outlook should we expect?
See, as far as RailTel is concerned, we are expecting, or maybe I can say, guidance of growth of the order of 20% for the top line. And the intention of this company, RailTel, is to cater to the government needs. So maybe the margin at which we are operating is less vis-a-vis other players in the field. However, the performance is expected to be better than the financial year gone by.
The project business has been, slightly subdued this quarter. EBIT also dipped in over there. What are the factors impacting this segment?
We have been in the market, and the competitive rates are such that RailTel is begging at a lesser profit margin the projects. Recently, the projects which RailTel has got, one from Delhi Police with the CDAC for providing MPLS, and one from MP for upgradation of data center. They are slightly at a lesser margin. That is why probably from project side, the percentage margin will be slightly lower. However, we are going to maintain this sustainable EBITDA percentage margin of the same order as that of last year.
Okay, so you'll be able to maintain the margins at the current level, but you have been announcing a lot of order wins of late. Could you tell us what's the updated order book number? And more importantly, what's the execution timeline for these orders? When will they start flowing into the revenue numbers?
Good that you pointed out. Our RailTel order book is strong. It is of the order of 5,800 crores as in the month of April. Further, we have begged 2 more orders, as I just told you. And these orders will materialize maybe in 6 to 12 months' time. Further, the AMC component, we will be able to generate the revenue in next 2-3 years' time. So not only the order book is healthy, we are going to have the continuity of the business in the coming years also.
What are the kind of margins that you can realize from these new orders? What are are orders on fixed basis, or will there be cost escalation because your cost goes up?
They are based on fixed cost basis, and as and when there is a variation, depending upon the contract condition, the variable factor will be added on to it. So primarily a fixed cost.
Okay, Ms. Singh, that point is taken, but given the fact that you have a cash-rich balance sheet as well, what will be the dividend policy going forward? Would you expect to pay a higher dividend amount back to the investors?
If you had noticed, last time RailTel had given 2.2 rupees per share as dividend, and for the financial year gone by, we have already made an interim dividend payment of the order of 1.75 rupees, and we are going to declare in the board meeting the balance interim, and I can assure you it will be better than that of the previous years.
Okay, Ms. Singh, on that optimistic note, we'll let you go. Thank you so much for making time and speaking with ET Now today.